All right. Good morning, everyone. Good morning. If all of you can hear me loud and clear, can I get everyone to type GM in the chat? GM stands for good morning. Okay. All right. Awesome. I see a lot of people. Samantha, Call, Wendy, Esther, CS, Keith, Sharif, Paul. Awesome. Thank you guys all for coming on time today. Okay, so for the fact that you guys are here on time, it shows a lot of dedication and effort, and I want to commend all of you for that. Okay, so just type CCC in the chat for clap, clap, clap for every single one of you. All right, now I hope that every single one of you that you all managed to get some rest, because today we are going to take things up another level. Okay, so yesterday we showed you how to create a second income for yourself, step by step, right? That is not just a dream. It's something that you can build, even though if you're starting from scratch without any experience. Now, before we dive in, can I get a favor from all of you? If I can ask a favor from all of you, just type OK in the chat. Okay, if I can ask a favor from all of you, please type OK in the chat. All right, okay. What I want all of you to do is to turn on your cameras, please. Okay, the reason is that later on, we will be doing even more live coaching. Okay, because we've received some of you saying that you guys wanted to do the live coaching, you guys want to be some. So we will be doing some live coaching to give you guys some real-time feedback as well, some exercises, and I want to be able to see all of your handsome and beautiful faces and connect with all properly. Okay, now before we dive in, I want to share with all of you something important. Okay, so just let me share my screen right now. Okay, let me ask all of you, how many of you did your self-put homework yesterday? So if you did your self-put homework yesterday, type in the chat ROI. Okay, if you did yesterday, please type ROI in the chat. Okay, Martin, Nadia, Yulanti, Dylan, Esther, Annie, Nias, KM, Jan. Okay, awesome. Okay, now you might be wondering, right? Why do we even assign you homework? Okay, when we assign you homework, right, it's not to test you, guys. It's not to make you feel behind or anything, It's because we want to help you to implement what you're learning. Okay, because when you start practicing, right, you will start building confidence, because what we taught you was theory, right? But when you actually practice it, it's like driving a car, right? It goes back to practical. Now, what we are going to do next, okay, is we are going to take some time to review your homework. Okay, but let me ask all of you, why do you think, like this morning, right? Why do you think we have a specific session to review your homework in the first place? Hint, I give you a hint. It starts with the letter F. Okay. Why do you think we take time to review homework in the first place? Type in the chat. Okay. Feedback, right? Feedback. Anli, Nadia, and Dylan all said it. Yes, feedback. Because what we give you alone will not change your life, right? It is the feedback and guidance that will actually sharpen your skills. Because when you get feedback, you'll start to catch what you didn't even realize you missed. Okay, and it helps you to avoid costly mistakes before they even happen. So even the best athletes, the best surgeons, or the best investor, okay, no one improve without proper feedback and guidance. So neither will we. So this morning, let's take a look at some of the homework that all of you submitted. Okay, now, so the good news is many of you who submitted have managed to execute it well. And I'm super glad, because it also shows me that all of you are absorbing well. Now, if you did your homework right, I want to share that you have really taken action towards your first real step towards a second income. Because when you take action, right, not just learning, is also how you create results for yourself. So you see, guys, within one day, knowledge increase, confidence increase, application level increase as well. Okay, you can even see we have Leila over here who actually made sure to do her OMI checklist on the two companies. This is very good. On top of doing the exercise, ensure that the companies match the OMI checklist. So this exercise that we give you, right, it's not just only for Google and Microsoft. Okay, you can apply it to the companies and you can practice it as well. Okay, now let me share with you. Let's do a very quick recap of the rules. Okay, now can all of you read the box in red or not? Okay, what does the red box says? Never enter a sell put for the sake of just premiums, right? This is a very, very common rookie mistake. And this is exactly how my acquaintance also made the same mistake and resulting in her making a 5-figure loss. But over the past few years, right, after going through the portfolio of hundreds of students, there are 3 common mistakes that we notice keeps popping out. 3 common mistakes. Can I ask, do you guys want me to share them with you or not? Because I also don't want you to repeat these painful mistakes. If you want me to share with you these 3 common mistakes, just type 3 in the chat. Okay, now, okay, very good. I like the morning enthusiasm. Okay, let's start with the first one. Oversold puts. Okay, oversold puts. Now, these are some screenshots from one of our students, right? I had a coaching call with her back in April, okay, just 3 months ago, and she was super panicky. Okay, and when we go through a portfolio, I ask her, what happened, right? We go through a portfolio, right? And I realized that she was exposed to over 270K in potential risk. Okay, what does this mean? This means that with her current sell puts that she has, right, she has over 270K, right, that she needs the cash in order for all the puts in case they get exercised. Now, this is risky. Why? Because if things go wrong, they could be assigned on all of them, right, instantly. That's why I always say, right, guys, you must always remember the rules. Selling puts is not just about collecting premiums. You want to protect your capital, and you must sell what you can afford to own that, and you want to own the company that you do the sell put on. Now, how do you check if you're overselling puts? Very simple. Just check whether you have enough cash in total to cover all of your sell puts based on the strike price. Okay, if you don't have, you have oversold puts. So simple, okay? And fortunately, through our coaching call, we help her to clean it up. I created a whole new portfolio for her that's less risky, but still generating income for her. So this is the first common mistake. Now, the second common mistake that I see very often is selling puts on companies that are fundamentally weak. Okay, so please type in the chat FW for fundamentally weak. Okay, I want to make sure that y'all know that we don't want to sell puts on fundamentally weak companies. So this is an example of one of our students who execute the BOSS on this company called Open Door Technologies. Okay, and luckily she came to us and asked us for feedback. And when I researched, right, and what we saw was this, the company was not fundamentally strong, number one. Number two, it got negative free cash flow. Okay, that means the company is not making money at all. Okay, there's no cash, they are burning cash. Okay, and number three, it was actually on the verge of delisting. Okay, and worst of all, guys, there was a recent price spike. And the price spike, we found out, was actually driven by this thing called a meme stock hype. Okay, not because of business fundamentals. Okay, now let me ask you, when you all do BOSS on fundamentally weak companies, do you think the stock price will have a higher chance of going up or going down? Going up, type up. Going down, type down. Okay, going down, right? Okay, so even though if you might get a sell put, right? What if you get exercise and then you hold? Then you cannot sell because it's a fundamentally weak company and the price keeps going down, right? If the stock collapses, you're left holding a terrible company, one that might not recover, one that probably you might not want to own, right? So the whole question is this: would you be comfortable being forced to buy this company and hold it or not? If the answer is no, then don't sell the puts. Okay, only sell puts on companies that you really want to own at that price. Not because they are trending, but because they are fundamentally sound. Okay, Ken, you are right. When price goes up, you make money. That is how sell put works. But again, you never know, right? Within these 30 days of when you sell put, how will the price go up or down? No one knows that, right? And if it goes down, what are you going to do? Are you going to take the shares or are you going to close it at a loss? Because it's a fundamentally weak company, right? That's the whole reason why we said that we have to. This actually leads me to the rule number 3. Okay, not rule number 3. This leads me to the most common mistake number 3, which is they don't follow the rules. Okay, type in the chat FTR. FTR means follow the rules. Okay, now the reason we teach all of you all of these specific criteria, right, is so you don't go through all of these painful losses. Okay, let me tell you the real reason why most people don't follow the rules. Okay, because they try to do things alone. They try to do things alone. They are greedy. Okay, and they try to like, let me just go and, wow, it looks very attractive. The premiums looks very, very good. The ROI like so much, right? And without thinking of what are they doing on what companies, right? Okay, they don't realize that they're breaking the rules because there's no one there to point out for them. And that is the most dangerous part, right? Not knowing that you don't know. When there is no feedback and there's no guidance, and you end up making small mistakes that quietly becomes big ones. Okay, so these are the three most common mistakes. But I want to share with you all something. Actually, there is one more final mistake. One more final mistake. And this final mistake, it actually pales in comparison to the three that I just shared with you. Do you all know what is this final mistake? If you all want to know what is this final mistake, please type yes in the chat. Okay, the final mistake that pales in comparison to the three. Okay, now the final mistake, right, is not taking all of this seriously. Okay, guys, I'll be very real and honest with all of you. So I've taught hundreds of students over the years, and many came in with a lot of hope, excitement, and big goals. Okay, but do you think everyone is successful or not? After I teach hundreds of students, do you guys think all hundreds are successful or not? Okay, type yes for all successful or type no for not all successful. Okay, not all, right? Usually, right, based on our experience, only 20%, out of, imagine 100 students, only 20% really go on to get the results that they want. Okay, and it's not because they are smarter or luckier, They all went through the same class. They all learned the same thing as you. Okay, so what do you think? Let me ask all of you. I want you guys to think about it. What do you think made this 20% successful and being able to achieve their goals and their dreams? Type in the chat. What do you think make them successful? Keith says follow instructions. Adam says follow rules. Benjamin says lucky. No, Benjamin, not lucky. Okay, I think it's not because they are smarter or luckier, Benjamin. Okay, luck doesn't always play a part. FTR, follow instructions. Okay, Niam says they are serious. Okay, all of you are exactly right. Okay, but if there's one thing, right, that accumulates everything that all of you said, it is their mindset. Okay, they have the millionaire mindset. Okay, now they took action, they didn't just watch and they didn't just participate. Okay, and that's exactly what we want for you in these 2 days, right? Now, for all of you who did the homework yesterday, all of you that did the homework yesterday, all you are showing signs of the millionaire mindset. And I'm very, very proud of all of you. But I also need to be very honest and upfront with all of you. Okay, out of more than 150 students in this class, only a handful of you, less than 20%, guys. Only less than 20% of you submitted. That is not good, guys. And I'm very, very disappointed. Because then the real question I want to ask you is this. Are you really serious or not when you share with us your why with us yesterday? Right? Because this was a direct access opportunity, for you that we give to you to get real feedback from us. Okay? A direct access opportunity. And we don't give this all the time, to have us look at your work, to support you, to correct you and guide you free of charge. And many of you just let that slip. Right? You're just decided not to do the work and said, never mind. Right? Even last night at 1 a.m., right? And just right just now before today's class, right? I was still marking them. Why? Because I am not doing this for fun, guys. I am here because I want all of you to succeed. I want to help you avoid the years of trial and error that I go through, okay, that most people go through. And I want to give you the feedback that can change your path immediately. Okay, Peter said very tired. I said, Peter, but I'll be honest with you, Peter, that is an excuse. All of us are tired. But if you really want it right, you will do it one. Okay, and that is exactly what we do for our BPC community, our Platinum Coaching community, right? Whether it's bull market or bear market, right? We don't just disappear. And some of you might also be thinking, I know some of you, I saw some comments yesterday that said that, now the market is all-time high. That is not much to do anyway. But let me tell you, that is one of the most dangerous mindset to have. When you think that there's nothing much to do, right? And you decide not to do anything at all. Because opportunities don't disappear. They are out there. You just need to know where to look. And in fact, over the past 2 weeks, guys, we shared 6 trade alerts with our communities, all based on setups that even today, when your say is all-time high, when everyone thinks it's all-time high, it is still working in today's market. Okay, because we don't just wait for the perfect market. Bull market, bear market, market goes sideways, right? It doesn't matter. We find the opportunities and we share with everyone. Because the people who succeed are not the ones who wait. They are the ones who prepare. So if you didn't submit, right, you want to ask yourself, why? Okay, was it a lack of time? Was it a fear of being wrong? Or do you just not take it seriously enough? Okay, because if you need someone to kick your butt, then you will move. If it means helping you to change your life and for me to be the one to kick your butt, I will be the one to kick your butt. Okay, so what I need you, all of you to do is I need all of you to promise me something. Okay, from this point on, if we ask you to participate, I want you to show up. If I ask you to turn on your cameras, I want you to turn them on. And if we give you another chance to get coached live, to come on stage, to go on free live coaching, I want you to say yes. Can all of you promise me that? If you are ready to give us your 100% from this point on, please type 100 in the chat. Okay, because if you give us your 100%, I am going to give you my 150%. Okay, look, now, I know that it's scary to step up, guys. I know it's scary. Like, some of you might be not sure that you guys are doing it wrongly. I think that's totally fine, right? But most important is all of you must take action. You want to take charge, right? Remember your why. When we started the class yesterday, we asked you your why. It's not for fun one, We all need to remember this and take action from what you actually want. Okay, but you might be unsure if you're doing right, but that is exactly why feedback is so powerful. It shows what you miss before it becomes a costly mistake. So grab that opportunity. Don't let it go when it's right in front of you. Okay, now that's all for the homework review, and I'm going to pass the time over to Rachel right now. Okay, she's going to walk you through the next powerful segment. So stay sharp, okay, and make sure to participate fully. Okay, Rachel, over to you.
All right, thanks, Beyond. Okay, everybody, let's give a CCC to Beyond. Yay, please type CCC in the chat. Okay, I want to really thank Beyond because he is giving you guys a very harsh truth. Because if, let's say, you are giving 100%, definitely you will see results. But why most people don't succeed? It's because they don't know what they are doing. And that comes to our segment today. But before we go into the segment today, right, I want you guys to think back. Okay, I always ask my students this, you always have to reflect on what you have learned so far. Because if you reflect, then you know what you have learned yesterday. Okay, so I want you guys to type in the chat, what have you guys learned yesterday? What is your biggest takeaway of the whole of yesterday, the 8 hours that we spent together? Can you guys type in the chat? Okay, some of you say the 5 pillars. Okay, OMI, selling put, BOSS, OMI, okay, buying good companies, okay, millionaire mindset. Very, very good. Anything else? Continue to type. I'm very sure you don't only learn one thing. Okay. Okay, having the right framework, feedback and guidance. Very good, because if you have the right feedback and guidance, all of these skills, all of the knowledge that you learn is going to give you guys results. Okay, Ali says, millionaire mindset, community, buy good companies. Very, very good. Dylan says, start right, start now. Okay, and now we are getting started. Okay, if you have invested before, right? How many of you feel that I should have invested more in the past? Okay, type me in the chat. I should have invested more in the past. Very good. For a lot of my students, they actually come to me because they regret their past actions. They have not taken enough action. They have not invested the money that they have before. Okay, but I want to share with you guys this morning, right, something very, very important, which is your portfolio management. Okay, let me share my screen. Hold on. Okay, so this is what we learned yesterday, the 5 pillars of millionaire investors. Number 1, you need to have a strong why. Okay, number 2, you need to have a millionaire mindset. Can you guys type MM in the chat? MM in the chat. Millionaire mindset. Third thing to have is your millionaire environment. Okay, your environment matters. Like what I said yesterday, if let's say you're in an environment where people are very scared to take certain trades, you see a correct setup, actually you know it's correct, but you didn't dare to take the trade, then you are not in the millionaire environment. Okay, you need to have a environment that encourages you to go and trust your instincts. Okay, have confidence in what you have done in the past, your research, the companies that you have conviction in. Okay, you need to have that in order to take massive profits in the stock market. Okay, and also number 4 is your feedback and guidance. You need to see whether you're doing things correctly or not. That's why this morning, right, Beyond spent about 20 minutes talking about what you have did in your homework. Okay, because if you done it wrongly, right, one single trade, it can wipe out your account. I've seen people, they make a single mistake, right, and their portfolio from profits become losses. And some of them, they even go into this thing called margin call. Okay, so very, very dangerous. Please don't do that if let's say you're doing it alone. Okay, get the right feedback and guidance. And Nadia says more confident after this homework session. Very good, which means in the first 20 minutes, you are learning something. And the 5th thing is start right, start now. Okay, and I want to ask you guys this. If let's say we compare a trader versus a millionaire investor. Okay, now think about it for yourself as well. Which one are you? Or have you been a trader or have you been a millionaire investor? If you have been a trader, be honest with yourself, type T in the chat. If you have been a millionaire investor, type MI in the chat. Okay, some of you say you have been a trader. Okay, let me tell you guys what a trader does. Okay, what a trader does, right, every single day. Monday, you trade, you keep looking at the laptop, keep looking at the charts. Monday, you maybe make $3,000. Tuesday, you probably lose $4,000. And Wednesday, maybe you are very, very stressed. You only make $1,000. Thursday, if let's say you're working a full-time job, you're not looking at this full-time, you miss a very, very, very good trade. And Friday, because you're so emotional, you have been losing money and now you are revenge trading. After you revenge trading, you wipe up your whole account. And it really happens in real life. I've seen it happen so many times to some of my students that they made this mistake and then they come to us. Okay, but millionaire investor or successful investor, right? They pick good companies with strong fundamentals, spend time thinking, not reacting. Many of us, we see the market go up and down, right? You do this thing called reacting. Okay, but that's wrong because life should be more than that. Okay, I don't want you guys to have a lifestyle that you have to look at the computer, you have to keep monitoring your trades. That's very, very stressful. And sometimes because of that, you can't even sleep well at night. Okay, you have to keep checking your trades. But millionaire investors, right, we sleep very well. Okay, I sleep very, very well. You can ask my family. I always sleep very well. And I only check my portfolio maybe once or twice a week. And 1 year later, millionaire investors, their portfolio is up 50% without needing to have that win every single day. And now, some of you might be thinking like, hey, millionaire investor sounds very easy, right? But I love the thrill. I love having to look at the market every single day. But let me ask you, have you seen many successful traders out there? Super successful traders. I have not known many, many successful traders, but I have known many, many good value investors. They show their results over the last 20, 30, 50 years. There are many, many successful value investors out there, people who are very strong fundamentally. But traders, I rarely seen any. Maybe in a few decades, I see 1 or 2, which are very, very good. Because why? Because they take this thing called risk. Okay, let me ask you, who takes the biggest risk? Is it a trader or a millionaire investor? Can you guys type T if you think it's trader? or a millionaire investor? That's right. Because a trader takes a bigger risk, that's why the results that they are getting is also up and down. So for me, right, I always look for track records. I always look for things that work. I don't try to reinvent the wheel, try to be creative. There are things in life that you can be a bit more creative, like if you're in the arts scene, you're in the film scenes. But for investing and for your real money, right, your hard-earned money, don't take the risk. But you are actually your biggest risk because we always have human emotions, we have human error. In fact, if you ask an AI or a computer to invest for you, maybe they do much better than you because you just ask it to buy and hold. Okay, they will follow the exact rules that you set at the start. But for human, we always have itchy hands, we have human error, we have emotions. Then we will try to take profit too easy. And we might also cut our loss too easily as well. Okay, so let me ask you guys, which would you rather be? Do you want to be a trader type T or you want to be a millionaire investor type MI? Okay, guys, participate. I want to make sure that all of you guys, all 150 of you guys are typing in the chat. I want to see 150 results, okay, when I actually ask you guys some questions. Because I'm going to go through this thing called when to sell and portfolio management. Okay, this is very, very important, especially for those of you who already have an existing portfolio. And yesterday, when you look at your portfolio, you run through the OMI checklist, right? It should be a case where you are always monitoring your portfolio to make sure that it's getting you the highest ROI. Can you guys type ROI in the chat? Type ROI in the chat. Okay, so a lot of people, whenever they enter the trades, they don't know when to sell. And if you don't know when to sell, right, you don't have the right game plan. Okay, so now I want to tell you guys some criterias before you actually enter the trade. Okay, which means that at the moment you enter a single investing trade or you enter a new company, you must already have this answer. Okay, you must have this answer on when you want to sell. Okay, so there are 4 things that hits the criteria, then I will go and relook at this stock, whether it's something that I want to go and sell or hold in my portfolio. Okay, number 1 is when it hits my desired returns. Okay, and let's say usually a good rule of thumb when I do options, right, when it hits about 50%, when it hits about 70-80% of my returns, then I will try to look at whether I can put it in another positions that have higher growth value. Okay, and also when stocks are overvalued, I will also look to sell. And if the reason that you actually bought the company is no longer valid, maybe there's a CEO that you really think that can bring the company to the next level, the CEO actually left, and maybe your buy is not valid anymore, or certain projects that they are working on is no longer successful, you might want to look into selling the company. Or if there is significantly better opportunity. So we always look for better opportunities, not because we want to itchy hand, we want to go and take a trade. It's because your money can work harder for you. That's why we want to put our money in a better place. Okay, so if let's say you are doing this thing called the portfolio rebalancing at the end of the year, or when some of you come on a coaching call with us on the mentorship, right? We always do this thing called portfolio rebalancing. Okay, we don't want to be too overly heavy on certain industries or certain companies. Okay, Adam asked if it's overvalued, then wouldn't you have to sell the Max 7 companies because it's overvalued? Very good. Later, I'll go through that as well. Okay, so when there are signs of companies that have a deteriorating operating performance year on year, not just one time, because one time can be like COVID, right? COVID slow down a lot of companies for that 1 year, but they actually recovered the next year. Okay, so when companies have deteriorating performance, right, some examples are declining earnings per share, declining cash flow, like what we learned at OMI checklist, declining return on equity, increasing debts. Okay, when certain companies, let's say last time, if you guys know this company called Nokia, they used to make our phones as well. They had increasing debt, or when Nokia was not being innovative, BlackBerry, they are not innovative. They're being taken over by Apple, Samsung, newer phones and newer technology out there, right? They are losing their economic mode. We also look to sell those certain companies. Okay, so you need to factor in the pricing ability of certain companies, their branding. Are they really able to command the higher prices? Do they really have that network effect that they can command these higher prices and people are very happily and willingly paying for these increasing prices? Okay, and are they able to have good profitability for their products? Okay, so the things that we do here is we want to try to rebalance your portfolio. Okay, so this is like a triangle, and usually when like how the Egypt pyramid works, right? Your base is always the biggest. Okay, can you guys type what is the biggest in written over here? It's actually this thing called your cash. Can you guys type C in the chat? Okay, my biggest base, right, in my whole portfolio, let's say if I have 100%, my biggest base is always my cash, because cash is king. Cash is king, because if let's say next day there's a certain market opportunity and you don't have cash, right, which means you don't have bullets. If you don't have bullets, the enemy come and attack you, right? You become very you lose out on the opportunities. Okay, so cash is always the biggest, and then we have our income strategies. Okay, so this is a little bit into the portfolio management portion. Really, we always have income coming in, which is your BOSS, which is your other strategies that's giving you dividends. Okay, and we also have growth in our portfolio as well. Okay, some of the growth stocks, some technology stocks that are in our portfolio that can help us to grow our money. Okay, and then the last part, we have options, which is our two-legged, our three-legged strategies that gives us good passive income as well. Okay, so I always rebalance my portfolio. That's where I know when to sell certain companies, where I know when to close certain positions. Okay, so the shape of your portfolio, I mean, this is the best case scenario where it's kind of like a pyramid. But it also depends on your investing objectives, your investing goals, because some people, right, they use a combination of strategies. They want to have more income, okay, which means maybe more dividends, more like yesterday I shared with you about Kevin, right? Kevin wanted to have more income strategies. Alvin also want to have more income strategies. Then they will switch into a bigger base for their income. Okay, so you need to keep balancing your portfolio every single year. Can you guys type 1 year in the chat? Type 1 year in the chat. Every single year you need to do this so you know when to sell the companies. Okay, Martin, you mentioned, Rachel, you mentioned the profitability. Does it mean gross profit margin? Yes, it's actually the net profit margin. Okay, net profit margin. Okay, very good. So, how millionaire investors decide when to sell, right? In our community, we do this as well. We do this exercise every single time where you feel like, hey, this company might not be the best in my portfolio, might not want to have this in my arsenal of stocks anymore. We use logic and we don't panic. Okay, whenever a company dips, let's say about 10%, 20%, if it's a good company, right? If you use logic, usually the retail investors out there, they are very reactive. Okay, they always panic. But for us, right, you guys here on the BOS MBA class, we use logic and we don't panic. okay? And you get second opinions, okay? Don't just look at the social media tips, don't just go and YouTube. Of course, we can use that for our research. We go and dig out all the statistics. How come actually this company went down by this many percent? And you get second opinions. But once you get the second opinions, once you get the feedback and guidance from your mentors, from online research, right, you have to make the decision yourself. Don't just follow the crowd. People say sell at this price, you go and sell. You have to analyze this company as well. Okay, go through the OMI checklist, and also you can use TA. Later on, we'll teach you about technical analysis as well. Those things can help you to make independent decisions. Okay, and you follow the system, not the crowd. Okay, and the last thing is you already prepare the exit before the entry. Okay, many people don't do this thing because whenever there's noise in the market, it's very easy to panic. And then they don't follow the rules. They don't follow their game plan. Okay, can you guys type FTR in the chat? Follow the rules. Once you set your rules, right, don't go and change it just because someone else asks you to. If not, we will call you some investor that don't have any opinion. You just follow the crowd. But if you follow the crowd, right, you know how the sheep follow the sheep in front of them, right? Then you'll get those very mediocre results. Okay, so a lot of my students, right, whenever they come and direct message me, they come and ask me, usually it's only two questions. Okay, this company can buy or not? And the second question is, this company, can I take profits or not? Okay, so my student Henry, right, he actually asked me, hey, I actually got 40% ROI in a couple of months. And when he asked me this, very, very funny. He asked me, hey, should I take the profit? Because he did a strategy X, should I go and take profit or not? Okay, and I told him, hey, what does the technical analysis say? What does the valuation says? What is your game plan at the start when you entered this trade? He used advanced options to actually boost his returns. That's why he got so high returns for this trades that he go through. Okay, so it's asking me, hey, should I take profit and go? Okay, so guys, take a hard look at your portfolio right now. If your portfolio size is let's say $100,000, if your ROI is 40%, that is $40,000 already. So think about your portfolio. How much is 40% for you? Have that number in your head. 40% can mean for someone with a $1 million portfolio, it can mean $400,000. Okay, so a single trade can actually help you to get this kind of amount. And if let's say you look at the absolute amount, right, is it life-changing for you or not? Is it life-changing for you? If it's life-changing for you, then you should be definitely doing options. You should be doing the things that we tell you to do during this class. Okay, so I always tell my students, take profit when it's overvalued. Okay, this is an old chart, but recently, Tesla, it has been very volatile. When it actually cross and start dropping down, we always tell our students, hey, it's time to take profit. And if you know when to take profit, right, you would gain so much more than those people who just don't know, and they don't look at the news, they don't see whether it's overvalued. They don't access the companies, whether it's still worth holding in their portfolio or not. Okay, so in summary, when do you actually sell? Okay, so at the start, you need to buy good and profitable business at a good price. Okay, and you need to be alert when you want to sell a business because the reason is no longer valid. It's no longer a good business, it's no longer undervalued. Then you can look to rebalance your portfolio. Okay, and some of you might be asking, when I look at my portfolio, right, now we're going to more portfolio management. How many percent should I put in certain things? Okay, a lot of people ask me, how do I do this thing called portfolio management? Can you guys type portfolio in the chat? Type portfolio in the chat. Very good. I want to see all your answers, because now it's very early on a Sunday morning. You know, Sunday morning usually is where we sleep in and we snooze, right? No alarm clock set. But very good that you guys are here today because we are here to learn and also improve our investment knowledge. So very, very happy for you guys. Okay, Gary put Z. You want to go sleep already, is it? Okay, so if let's say you have a portfolio, then you definitely need to do this thing called portfolio management. And you need to have a portfolio of good companies, okay? So just now I mentioned, some of you have a dividend portfolio, you have a asset play portfolio, you have growth companies in your portfolio, and you also do start to do BOSS now, right? Which gives you about 2% premium every single month. Okay, so this is how you should be looking at your portfolio. You should be looking in terms of percentage. So we need to determine the shape of your portfolio. Okay, just like building a soccer team. Every single stock in your portfolio has a specialty. You know, some people they are the goalkeeper, some stocks that maybe they are the striker. So every single stock that you put in your team in your portfolio, they need to perform. Okay, because in a game of soccer, you need everybody to play their roles correctly. So now I want to ask you, are you a passive or are you an active investor? Do you want to be passive, which means you don't need to spend so much time doing it, or you want to be more active? Can you guys type P or A in the chat? Okay, so I know what to spend more time on. Okay, most of you want to be passive. Very good. Because we have a life outside of this, right? We want to enjoy our time with our loved ones. You know, we want to enjoy our hobbies outside. Okay, so let's say if you are a passive investor, okay, maybe you want to put more into dividend stocks. You want to have about 20% of growth stocks. So it can still help you to grow your money, but you can put more into dividend stocks. Okay, some of you, you want to be, you are passive now and you want to be active. Very good. You can do that as well, but you need a transition. Okay, you need to put in the hard work. You need to put in the time. Okay, so dividend stocks, right? In Singapore, it's about 5% returns. So if you look at your portfolio, you do this thing called the 80-20 rule, right? Let's say the growth stocks gives you about 15% returns every single year. Then your dividend stocks gives you about 5% every single year. Then you add up, it's about 20% already. Okay, you beat the market. But let's say some of you, you want to have a combination. You are a semi-active investor. Then you have to add this thing called BOSS in your portfolio. So BOSS, every single year, we said that you can do about, every single month is 2%. So maybe about 1 year is about 24%. But most of my students, they get more than 20% for their BOSS strategies because we are very, very active doing this and we also get very, very high ROI. Okay, then you can do this. Later, I'll send you guys a summary so that you can know what kind of allocation that you want to do. Okay, and some of my students, they are very active, which means they look at the stock market more often. You know, they do reading daily because they love it, not because they have to do it, it's their job. Okay, they love to do it, that's why they read daily. Okay, many of my students, they always send me news because they are very, very updated. Okay, so is Beyond. Beyond also send me a lot of news. Okay, and you do weekly investing, weekly monitoring. So your active portfolio, you can also add in about 10%. Okay, active portfolio means the shorter trades. Okay, so some of our trades we do, some of our options we do a shorter period of time because it's let's say we do the strategies and we already gain a certain amount of percent. We already gain our 20, 30, 50%. Then we exit the trade. Okay, so your active trade should bring you about maybe 50% per year lah. Okay, so now we look at this as a whole, right? Can you guys take a screenshot of this? because this is very important. Take a screenshot of this. Because you need to ask yourself, do you want to be a very active investor, or you want to be a semi-active investor, or you want to be a more passive investor? Okay, usually some of my students, they are more they are closer to their retirement age. They will tell me that they want to be a passive investor. They only want to look at the companies they have maybe quarterly or annually. They don't want to monitor so much. Whereas most of my students, they are actually in the semi-active investor stage, which they do monthly monitoring, not too much. Okay. And very active investor, we have some who really like to do that as well. But usually we are all in this circle. Okay. Active versus very active. How much time to spend a day? I would say very active. Maybe you look at the charts, maybe one hour a day, 2 hours a day. Whereas active, it's just maybe you look at it once a week or a few times a week. Okay. And now let's go into this thing called position sizing. Okay, when you do position sizing, right, I always tell my students, your max position in any company, right, it cannot be more than 10%. Can you guys type 10% in the chat? Cannot be more than 10%. Even if you are doing options, right? Let's say yesterday, when we did on Google, each trade, it shouldn't be more than 10% of your whole portfolio. Okay, and you need to use OMI checklist as the benchmark. Okay, only when they pass the OMI checklist, then you can do 10%. Okay, only if they pass, and this is the maximum allocation. And sometimes your stock, when it's a very good company, it may grow to more than 10%. Maybe you just put 10%, but it grew, it doubled in size, then it become 20% of your portfolio. Then you might want to look into reallocating the certain stocks. Okay, just like some of my students, when they actually look at my trade logs and my watch list, right, there are many companies that are currently attractively priced. There's always companies that are attractively priced. Okay, right now maybe in the healthcare sector there are more opportunities. Then I'll put it over here for my students, right, to have a look. And I always tell my students, you need to portfolio size correctly, because even though there's so many companies that you can enter right now, right, but do you want to enter everything? You don't want to enter everything, because if you enter everything, then probably your portfolio or your cash will be allocated already. Okay, I always tell my mentees, even if it is attractively priced, doesn't mean you have to enter. Okay, it's just for you to analyze and see whether you want to enter if it's a company that suits your portfolio. Okay, let me answer some questions. PSA, can BRK be an exception? Yes, there are exceptions in my portfolio as well that are more heavily weighted. Okay. Jason asked how to get this trade alert and trade log. This is exclusively for my mentorship students. Okay, so I just show you guys that there's always opportunities. But this sheet that I always updated every single month for my students, so they can just go in and see what companies that they want to enter. And whenever I enter certain trades, I will tell my students as well. Okay, so that's why I wrote here that the win rate of our trade logs is about 90%. Okay, when someone tell you their win rate is 100%, you need to be very careful, because it's not possible. Okay, it's too good to be true. When something is too good to be true, you need to be a bit suspicious. Okay, it's a red flag. Okay, so okay. Amy is asking, if our money is limited, once we get assigned, the portfolio would be easily over 10%. Yeah, then probably you shouldn't have done the trade in the first place, Amy. Okay, so For your portfolio construction, right, you need to invest consistently. Just like many of my students, for starting investors, right, you need to set aside cash every single month. Okay, set aside cash every single month. Take it like forced savings. Okay, whenever you have, let's say if you make a certain amount, you have spare cash, just put it in your portfolio, because you don't know when you will need the cash to actually invest in stocks. You don't want to see the opportunity, then you react and say that, hey, actually there's opportunity. Let me go and top up my brokerage. Okay, don't do that. Just treat it as a forced savings. Even if you go in and put it in your portfolio, right? The USD maybe also better than you just keeping the money in the bank. Okay, and try to collect different stocks every month, build up your portfolio if you're just starting out. Okay, don't go and straight away when you start to invest, right? Just go and enter like 5 to 10 different companies all in one shot. Okay, it is a journey. It is an accumulation and compounding of all these good companies, right? That can give you the highest ROI. Okay, guys, type ROI in the chat. Want to make sure that you guys understand this, because if let's say you do your portfolio construction properly, your ROI will be very high, just like many of my students. Okay, so now I want to take you guys through this next part, which is actually our strategy X portion. Okay, but now it's about close to 1 hour already. I want to let you guys have a quick break, because I want you to be very, very freshened up before we go into this strategy X. Okay, strategy X is my favorite strategy, because it is a strategy that gives me the highest ROI. Okay, this highest ROI, right, it can be up to a few 100%, few 1000%. I've experienced it before. Okay, so guys, can you guys type X in the chat? Type X in the chat. Okay, Pauline, does the broker pays interest on uninvested cash balance at your account? The answer is no. Okay, there's no such thing. Unless you put it in a dividend stock. Maybe it will give you some dividend. It's not like a bank. Okay. So Jason say very excited to learn about X. Very good. Let's take a 5 minutes break right now, and we will come back at 9:57. Okay, can you guys type 9:57 in the chat? 9:57. Okay, very good. So let's go.